All right. So good to see you guys here, and some of you that joined yesterday at the event in Houston. Actually, we're in Houston. We are attending one of um, the conferences. We attend a lot of real estate conferences. You always learn something, especially if you are new and you're trying to decide which way to go. Who do you want to work with? What kind of market? What your business model is going to look like? You have to be exposed to different environments, different networks, and we always meet amazing people, and that's how we met you. How we found you. And that's something that we've been doing since we came out of our own shell, pretty much. And 2020 was a great year for us and the business, and it showed us a lot. And I know some of you we met through, let me take a look at the names, but some of you we've known for several years, and some of you maybe we just met recently, and that's why we're here. Either way, our mission has been to, again, since we started opening up to partner with other people, our mission has been to be transparent and show you the things that we've done, the things that have worked, and we also have some sessions where we talked about the lessons learned, the things that didn't work out, because that if you're in the business long enough, you're going to have some disappointments. You're going to have some situations where the results might not be what you expected, and if you don't learn from those, if you don't share those, that they doesn't serve the purpose. It's like in the medical community or in the military. Both of those are in our background, and in the military you have to document everything. That's one thing. Then you have to write what we call ARR, after action, AAR, after action report, and it documents everything that you did, it was done, and then it documents what could be done differently, and then that document stays for other missions to come and read about it. And it's not like pointing fingers. Is to document the processes, things that work, and things that didn't, and what are the rooms for improvement. And the medical community is a little different. Yes, we do also the reports, especially if there's something that went wrong, because we want to learn from it. The reality is that when you're writing such reports, is usually when things went bad, and you want to learn from it. And those situations, you kind of there's no practice. It's not like you can trigger. Let's simulate a very allergic reaction to something, to see what things can be done differently. And that you don't have that opportunity. And in the business, it's very similar. We don't want to simulate bad things, So the things that go bad and the things that are challenging, those are the things that most importantly we have to go back and review, and then make changes, make adjustments, and then add contingencies to the things that we do or we're gonna do in the future. And that's how we improve. And so the more that you do that, the more scenarios that you're involved, the more other stories that you hear, the better prepared you're going to be for when it's your time to execute, your time to acquire, your time to raise capital. And that's what we are here. That's what we love, opening the doors, opening the Zoom rooms, so that we can come together and share those situations. So if you have any questions, if you're here, if you have any questions, put them in the chat. We normally answer questions that have come up in the lately we do these meetings. We do 3 meetings a month that are virtual and free for everybody to attend, and we open up for questions when we are in an events and we have a lot of lessons learned. We share those. And we actually going to be restructuring how we meet, because we've been doing we meet every third Thursday of the month. That's going to stay the same. That's a virtual meetup. Sometimes we bring speakers, sometimes we share, we bring panelists. And so that's every third Thursday of the month at 7 p.m. Central. And then today is partnerships and investor calls. Anybody that wants to partner with us, if if you're invested with us, we update you on the things that we've done and the specific deal or deals. And then we also talked about what other deals we're exploring. And then we have next Saturday we have open hours, office hours, real estate, and that is also just Q&A. But we probably gonna do one more to keep it consistent, so we'll be announcing it. And stay tuned. So there's plenty of opportunities for us to keep connected. And just remember, this is something that one of our mentors always teaches us. Pay attention to the things that you don't agree. The things that you don't agree on, the things that you're like, I wouldn't do that way. Well, those are the things that we need to be hyper focused on understanding and really take the time to see why is the other person um practicing in that way or negotiating in that way. So for example, we like, this is just one example, but we were not necessarily going after double nets or triple net assets. We just didn't see, like, it was too risky, and like, we were like, I don't even understand how you make those assumptions, and you have one tenant, and so we started paying more attention to it. Same thing for assisted living facilities. We've been studying that now for like solid last year, and we talk to people that runs them, understand, and we pay for mastermind classes. So those are the things that we're like, we just love the real estate. We love the real estate. We don't want to do any other side of the business. And now we're like, you know what, let's study. And so we've been studying purposefully, and now we're like, okay, now we're hunting for that kind of deals. The I was actually being here in this conference this weekend. I run into a lot of operators that we met probably about 5 years ago now, and it's fun to see, to catch up with them, to see what are they doing, what are you working on now. And I remember when we first came into this industry. And again, if you have questions, please put them in the chat because we'll get to questions. In the meantime, I'm gonna fill in and I'll share this because I think it's pertinent when you're meeting people. And whether it's in person or virtually, it's important to keep the continuity of that relationship for several reasons. One, you're gonna learn faster when you are exposed to more situations. Like they have some deals that they're being challenged with refinancing, doing capital calls. We all have been in this industry long enough to see what happens after the acquisition. Maybe if you're new, all you're doing right now is like looking for deals, looking for deals, looking for deals, and maybe you spend a year looking for deals or getting more comfortable looking, call the broker and getting more information to do the underwriting. What happens after that is the actual work. And I know you're probably thinking, well, I've been working so hard. I've been looking for deals and running the numbers, and you're telling me that there's more work, and there is a lot more work that goes on once that you acquire the property. And so back to being in a community and having those connections, like I said, we met at least 4 or 5 years ago. And what we were doing back then was a lot of diversification. A lot of them are very hyper focused on multifamily, and we early enough we started diversifying to storage facilities and mobile home parks. And now that we're catching up, they're like, well, how are you doing? How are the things that you're managing? And so we get to share openly, like ask questions. Hey, I have this situation, or my occupancy has been sagging. What you guys are doing? And you will think that there's like a competition. Well, if I'm doing something that works, why would I share that with you? And it's not like that. It's not like that. And when you get into a community that wants you to see grow and expand, and we're in the same industry, but we're not still in or our tenants, from one, maybe if their property is across the street, which actually one of our partners, he has two properties right across one of the multifamilies we have here in one in Dallas. We can literally we compete, when we do when we do our comps, his two buildings are our comps, and so he knows what's going on with ours, and so we were just talking about it, like the occupancy, it's just like sagging. What his our occupancy sagged last year. We were like in the 80, 85. I remember, like, oh my gosh, this is crazy. It's a great property. It's an no, Alan, rich. Oh gosh, it's right. Like, it's like by the stadium, the Cowboy Stadium. But so very good location. Anyway, our occupancy was pretty saggy, and we changed property management. And so like right now we are 93 and projecting 90, like what actually 93, 90, 95 average, and we are projecting 97, which is super strong occupancy. And so we were sharing that, and he's like, "Yeah, my occupancy is suffering." I'm like, "Yeah, because we're still in all the tenants now." But we still have this communication, like, you want to share resources. So we're part of several communities. And what I'm trying to say here, if you're not part of the different communities, become that, or create your own. That's what we did. We created our own because we saw, not only through being in different communities, that every community serves a purpose. And now when you are part of a community, make sure that you're contributing to that community as well. Okay, if you go and learn something new, just bring it to that community. And if you have your own community, that's what you will want. You will want to be able to serve your community, to help them. The more they win, the more everybody wins. And so anyway, so we're here in Houston, and one of our, actually two of our partners are here, flew in from Florida and New Jersey. First deal, they've never done a deal before. Actually, the one from Florida, she's been now on two deals with us. But again, it's like, you are helping them build their skills. They've raised capital. They're managing. There's like, you abstract that their knowledge. You see their potential. And if you're leading a community, like that's your best paid off. That's why you show up every day. Like that's why you keep putting these events together, because when one of your community members wins, it's like, oof, it's like your best gift ever. So anyway, welcome to this community. And if it's your first time, I hope that you keep coming back. I know that I see a lot of people that has been here for years, and many investors as well. So thank you so much for being here. Send your somebody put here that chat is disabled. It is disabled because it's just me right now. I don't have a team member in Chris's with one of the brokers. So if you have a question, put it in the Q&A, just where you put this comment. That way it makes it easier for me to keep track of it. Okay. But yeah, so a couple of updates. Like I said, we are here in Houston, and we have been in Texas for the beginning of the year. Usually we travel out. We are out and about. We're actually going to be going to ski next week, but this is what we do. We go to different places. We put events together. We visit with partners. We visit with brokers. Right now we're in Houston, and I actually just talked to the broker that bought us the deal, and so gave her an update, and she had two more deals. So if you're in Texas and you're looking for smaller deals, let us know. We're not going to go after those, but if you want to, she was just telling me about it. But this is what we do. Share the resources. But anyways, I was giving her an update, and I will give you an update on the acquisition that we did. But let me read this question here. Um, let's see, what's the most important things to focus on in the first 90 days after closing in a multifamily property to give the operations the best chance of succeeding? Oh, I love that question. That's a great question. That's going to serve a lot of people here. So thank you for that. I will repeat it in just 1 second. Actually, let's just move into that. How about that? So the question is, what are the most important things after the acquisition, in the first 90 days after the acquisition? What are the most important things that you can put in place so that you can have, let me just read it, that you can the operations the best chance to succeed. Well, it depends on depends on the deal. That's always going to be the straight answer. But depends on the deal, depends on what your business plan is, depends on the asset. But across what I would say across every asset and every deal that you have, you want to establish KPIs, key performance indicators. It doesn't matter what market, it doesn't matter what if you have a property management or not. If you're asset managing only, you always want to have KPIs, and the KPIs that we track are at least three KPIs per item per category. And what are the categories that we measure that we want to keep an eye on? So key performance indicators, that's what KPI stands for. It's the things that are associated with time and with money. So think about it, let's say a multifamily. Well, you obviously want to manage and keep an eye on the income, the rental income. So you want to have at least three KPIs around that category. All right. So we monitor, for example, ready units, units that collections, uh, you know, the what do you call the occupancy. So anything that is associated with that. Now then you start breaking it down. Okay, so make ready. So what is the expense? What is the damage? How much time is it going to take the team to turn it over? So you want to establish that early, and you want to communicate that to your team, whether you have a property management or not, um, because then you have the rules of engagements. You know is the conversations that you're going to have with your teams are going to be very focused. Because you agree on this is important, and because it's important, I don't even need to ask you for a monthly whatever. Like you already know what you're going to report to me. So establishing those KPIs and then monitoring them and have those expectations clear for your team or your partners. So that's I would say that's across all assets, what you want to establish. And then some KPIs is going to be dictated by the lender, by, some property managements. Again, if you're outsourcing that, they're gonna have those reports for you, but you definitely want to monitor the time and the money, all the resources that you have. The other thing is getting organized. So I don't know what everybody uses. Like we use Monday.com. It's a very robust tool. We use it for the acquisition phase, and we use that also for stabilization. We use it it's a project management tool. So it allows for visibility. For everybody in the team to have visibility of the things that you want them to have visibility on. So, for example, um, you know, uh, turn-in units or CapEx implementation. You can track all your expenses. You can assign to your team who is responsible for what. So Monday.com, we've been using it for several years. Excuse me. Um, so having organizing yourself, having all the contacts that you're gonna be using for many years. For example, I mean, we have acquired, I think, like 20, maybe 26 closings. And if you ask me who was the title company that closed on property number five, I don't remember. And because of that, we can always go back to the Monday.com, look for the property, and you can find, not only the name of the provider who closed, all the documents, everything. So everything is there. So and if you're thinking on scaling, and one deal will be your first deal, and then you have 10 more, then you definitely want to build those systems early. Okay. Um, so yeah, that was a great question. A great question for to get us warm up. So thank you for that. And so today, wanted to share pretty much an update on how is that 34 unit that we acquire the day before Thanksgiving. We closed on that property, and I guess less than 3 months, we are done as of today with the capex. And so and that included holidays, included a freeze, like took like 3 or 4 days, and then another rain with 2 days of rain. So again, you have to stay on top of things. You have to like have all the capital. You have to have you stay organized. We have our partner that is managing that branch, which has been super helpful. Uh, that's part of the contribution, and that's how we divide and conquer. And because we're also looking for other deals, so we cannot afford to be fully embedded in that acquisition. But so yeah, we are now had executed about 300 and about $300,000 on of capex. And we like, so these are some numbers. If you want to run some numbers, maybe I can do that. Uh, let me look for my calculator here. But just so, let's see, I'm gonna I'm gonna do a very quick calculation here, okay? Let me see. If you want to pull your calculator out and follow along, because this doesn't have to be um too difficult, okay? I'm gonna do baby math. All right, so here we are. This is a 34 unit property. We are so 34. Sorry. We bought it for well, they wanted 3.1 million dollars is what they wanted. So if you let's just do 3, is that 3.1? Yeah. Divided by, I feel like I'm writing here, by 34. All right. No, that's not it. I'm missing something. Yeah. I need a mouse for this. There you go. Yeah, yeah. So this is a property in Houston. It's like 15 minutes from downtown. That's where I am right now. Very, very good location. So and then so you're looking for what's the potential here? What's the if I'm gonna put we calculated we'll put about three 300, 325, 350 max on the fixings. But anyway, let's just keep it as this is what's called the entry price, the basis of the acquisition. But we were able to actually negotiate the price to 2.76 um per one, with everything included. So we got this property, um 81, 81 a door. So now in the rents, average rents here were, um there were, let's see, when we got it under contract, they were at 1,300. And when by the time we closed the last one, last average rent was 1,600. No, I'm sorry. 12. There you go. Okay. So if you were to multiply this times 34, okay, plus, I'm sorry, times 12, that's how you annualize. That's the rental income. Okay. Um, And then we calculated that we had about 50, actually with 45% expense. Sorry, like, I think I did 50. Anyway, so let's just do, actually, I'm just gonna do 50, okay? Just to show you. And then we bought it at 7.2. Yeah. And we didn't include any other income because we were like, it's too small of a property. We're not gonna include any other income. So it's divided by 7.7. So two. There you go. All right. So that was the value of that property if we were not to add any, or did I say, in this case I put 100% occupied, which we actually did 90% occupancy. And it makes sense. we were like, this property is going to cash flow. So what I'm going to show you now, because after we did all the implementation of the interiors, we were able to increase the average rent now. So we had 34 units. Um, okay, and we went 240. This the jump on rent increase. Okay, all right. So times 12, all right. And then we divide that times point zero uh 72. Let me see what I can get crazy numbers. No, hold on. I did 34. We only done 14 leases. So let's do it again. So 14 leases times 240, that's the rent jump, times 12 to annualize it. Okay. And then we're gonna divide that times the cap rate that we bought it. I'm just gonna say rounded to point 0.7, 0.02. All right. So that this is signifies the increase in value of this property just by increasing by increase doing the 14 units rent increase. Okay. So this, like, again, this doesn't have to be difficult. And we're talking about the things that we did. Let me stop sharing here. Maybe I already got you all dizzy. But what we did here, it's go from the outside in. So what we did was immediately the rebranding. We added a website. Didn't have a website. We added the software for property management. We actually build our own. We have some that we were using, but we build our own. So if you have a small asset and you're like, oh, what do I do? What do I do? You don't have to break the bank. And so we use our own CRM. We build all that, build the website, put systems in place, increase the rent. We show the residents what we wanted to do. So we wanted to do. We rebranded. We painted the outside. We did the foundation, fixed the foundation, fixed the roofs. Like all the roofs are brand new now. We did put laundry machines in place because the ones that were there were not functional. There was one machine that was working. So a lot of dissatisfaction. So we make this huge impact. Like, hey guys, we're here. Oh, and then we're painting the whole building. We're almost done by tomorrow. They should be done. Um, so all of that, like, it was just like a wow, they've never done anything in this property at all. Like, this is vintage as it gets. So, we introduced all of that. We had the conversations with the residents. They understand that this is a business. They like living there. And like, none of this 15 leases, 14 leases that had already signed with the rent increase, like there was, as long as they saw the value, and we present them with this what we were doing to the community. Immediately they were like, okay, well, we anticipated that the rent was going to go up. Now that we added a picnic area, we have some grilling stations. Like, we added value. We brought in um the teams. Right now we have 4 crews doing turnovers. So we already have families that are talking to other families, and they're inviting them over to see their unit. So it's, again, here we are talking about numbers and all these communities and all these events that we go, and then you get to the operation, the execution, and then you see their families. You're changing lives. And this is for all of our investors that are here. This is what you guys help us do, and it's like, there's that when you see them win, when you see the community do better, and they are proud of inviting somebody in their house because they love the product that they're living in. Um, one of the families moved in there, and they actually were living in one of the units. And then when they saw the upgraded units, they were like, my lease expires in August, but I what do I need to do to get into the new unit? So we said, well, we keep your rent the way it is. We move you over at no expense, and then there, you'll sign at 12 months, which is another year, at a new rent. Okay, done. So now they're enjoying the place much sooner. They already are in a lease that is going to renew at a new rent. We added renters insurance because they didn't have any renters insurance. So we are implementing that. We want to make sure that they're covered and we are covered. So we added renters insurance, and we were able to recover a lot of people that didn't have the cars registered. They have two cars that they can have, and then anything after that, there's a fee for it. So we were able to recover that income. And pets, they were not charging for pets, and they were not even like following the rules really. They were the other owner. So we brought all of that in place, and yeah, as long as you explain that to the residents, they are super understanding. But anyway, this family, that when the mom came and saw the unit, she's like, I want this. Let me talk to my husband. So she went and talked to her husband. The next day, she's like, we are ready to sign the lease. And so they wanted to move. This happened last weekend. They um they told the kids, they have three kids, we're gonna be moving. So one of the youngest kids started crying, like, no, I don't want to move. Like, you have to pack us. We're gonna be moving to a new house. And so they're from El Salvador, I believe. And so he like, oh yeah, we're gonna go to El Salvador. And she said, no, we are not going to El Salvador. We're gonna be moving somewhere here. And so he couldn't comprehend. So he was like not doing what needed to happen, which was packing. So she's like, do you want to go see it? So they came, and she's like, and he sees the property, the apartment, because he's just like, he's scared. And he has some learning disabilities. So anyway, so the second the kid entered the apartment, he was like, and he was running from room to room to see, and he was like so excited. He'll take a look at that at the unit, and the closet. He wanted to go in every space, and he was like, "Mommy, can I have this room?" And he was so excited. And I mean, like, again, to see that, at the level of being an operator. And again, if you're investing in larger properties, like we have others that we don't have this connection with the tenants. You still get to see the life of the community change. But her I guess, most life-changing situation, when she shared that the therapist her son was going to be able to come to the house now to do his therapy, because the other unit was too ugly. And she's like, I was embarrassed because even if I clean it was so old, like it showed. And so she's like, now you can have your therapist come visit you. She's like, I don't have to take an hour and a half to take him to therapy. And like that alone, like eliminating the extra trip, and just being able to welcome the therapist at home where the kid doesn't have to leave. And it's just, again, those are the things that together we can do. And all of that translates to having systems in place, because yeah, it's cute, and it's nice to have this kind of stories. But reality is that if you want to scale, you have to put systems in place. And that goes back to, what are the things that you need to streamline. We do have a checklist, that the 30, 60, 90 checklist. What are the things I need to tackle and get done in the first 30 days, in the first 90 days, and the 60, 90 days, after acquisition, because you're going to get busy. And if you're not looking 2, 3 steps ahead, you're gonna end up catching up. Everything that you do is like, oops, I should have done that last week. Oops, I should, and you're late, and it adds too much stress to your life. And again, if you're gonna be going after other properties, and you're tied up to one property, it's gonna be crazy chaotic trying to go after the next property if you're not building those systems. And you have to do that from the beginning. All right. Let me see, make sure I am not reading questions here. How do we negotiate from 3.1 to 2.76? It was a process. Actually, we were just talking to, like I said, my partners are here, and we had our meeting in person yesterday, and we went through the units and just recapping everything and planning for the next step. So if you want to be hands-on, let us know because we can definitely do the hands-on. That's how you learn. Anyway, so how do you yeah, how do you negotiate? Um, and again, like I said, I just saw the broker that we bought the deal from, and she's a good friend of ours. But when you get into negotiating a deal, and it was funny because she even said it. She's like, "Oh, it's so good to see you as a friend, not as a broker." Because when you're negotiating your deals, you want to be assertive, aggressive. You want to be gentle. You want to be professional because it's a reputation that you build in, and you don't want to be all nasty about it, like, oh, I'm gonna walk away. But you have to be tactical, and you have to be in always like for us, like, hey, I could do that. I could buy it at 3.1. It makes sense for me. However, the investors expect this return. So you always want to put your investors up front because, like, could I buy it at this price? Yeah, it did make sense. You saw it. It was at 3.5 that it was value at just, uh, you know, uh, but if for our investors, because we invested through a fund, the fund is looking for properties that are meeting this criteria. So you have your criteria, you have what you're offering to your investors. And if you don't have a fund, if you have investors, you always want to make sure that what you're negotiating is going to be beneficial for the investors. Obviously for you as well, but like if you don't have investors, then you don't have the money to go buy this deal. So I've seen a lot of deals, a lot of people like negotiating not on that behalf. So and you detach yourself from the process, especially with the broker that was a friend of us, or is still a friend of us. Um, so again, you want to be tactical. You want to go back to this is why the property doesn't support that price. Like we were able to do a list after we did the due diligence. These are the things that need to be fixed. And because of that, yeah, the location is great. The track record for rent rolls is super strong. However, these people is here, and look at these living conditions that they have. So we always will go back to these are the things that I will need to do in order to achieve the things that you're telling me I could achieve. Yeah, I can achieve the 240 rent increase, but I need to do this, this, and that. And some things were like, okay, well, you're gonna get that typical response. Well, if this property is being sold as is. Well, yeah, as is, and as is, this is what it supports. Because remember, you always need to take that to the lender, and the lender is not going to lend you more than the property can support. And what is that going to leave you with? Oh, well, now I have to raise more money. Well, that raising the money is not the answer for everything, because when you raise money, you have to pay that to somebody. You have to pay it either to the lender, or you have to pay your investors. So again, going back to investors are expecting this. Why would I pay this much when it's going to eat into my profits? So anyway, so knowing your numbers, knowing it, to the best of your knowledge, knowing what you're gonna need in this property, and like in this case, it being an older property, we plan for it. We use the due diligence list. And then we added a very hefty what do you call it, contingency, meaning that this is what I project I'm going to need. However, because there's a lot of unknown in this property, because the age, then we're also going to stipulate that we might need this much more percentage. We added 20% contingency. And if you're not familiar with this, if this doesn't makes sense, please make sure you ask, because I don't want to, keep going and you're like, well, I don't even know what that means. Okay, so this is a safe place for you to ask these questions. I'm not going to assume, but I also want to keep the conversation elevated. Okay, but if you have questions, please, put it in the chat. All right, so that's how we negotiated. Congratulations, thank you. Can you share the checklist? Yeah, if you're working with us, we'll definitely be something that you shared. We want to be working off that list. So for sure, let's see. I would love to learn hands-on. Let's go. Let's go. Yeah, we our goal is to continue to bring new partners. We love the partners that we have, and we going after other deals. So because of that, we always have room for new partners. And it takes a lot of time. When you're new, we make sure that we are there for you as far as helping you learn the program or the business, and also obviously making you successful, because when you're succeeding, then we're succeeding together. We're successful together. So yeah, if you do want to do acquisitions with us, you please reach out. We'll be happy to have grown. Like, we're again talking to our partners this last night, and we're like, okay, are we ready? Like, we're already looking for, we are gonna acquire something, and we're gonna be needing to have this ready to just be managed remotely. But it's incredible to see, like, the like how you can, what I call it, abstract the transferable skills from business, from like any background really that you have. And maybe you're like, well, I don't know, I don't have any business experience. I don't know a lot of people. There's something that you have, a talent that you have. Maybe you have time, and we need the, like, as many hands and brains that we can gather. That is our mission. And what I can tell you is I was upstairs earlier, and there's a broker lender that you know I'm having a conversation. I mean, I was having a conversation with another person, and then it was like, clearly, like, what I'm trying to say, and I'm gonna be honest. And if you don't agree, maybe you just don't agree, and that's okay. You don't have to agree with everything I say. But what I can tell you is there's certain places where you go, whether you're a woman, whether you're of color, whether other nationality, you can clearly hear my accent. And but if you have the confidence, there's like, you're gonna be in places and positions where you're gonna be uncomfortable, and some people makes their mission to kind of close their door for you to go in. So you have to have something thick skin. If this is not a business where everybody's welcome, and we're gonna, like, sing kumbaya. It's not. It's very competitive. So do the best that you can. Like, seriously practice, like, understanding, and like, learning what are the things that you, as a person, have that can contribute to a team. Okay, because that's it. Like, if you have money, that's awesome. That's gonna be helpful. However, you're still gonna need other skills, like, maybe you have a business, maybe you are in the medical community, maybe you are an entrepreneur. Like, knowing and understanding what you can bring of value to a community or to a team is what's gonna you know is gonna sell you. Because remember, when you are looking for a partnership, you're pretty much selling yourself. You're selling the way you think, your flexibility, your time. Like, what is it in you? Maybe do an inventory that you can contribute to a team. And if you have a hard time finding 10 things that you can contribute to somebody, just uh, you maybe do a one-on-one with me. Seriously, like, I've talked to so many people that are like, oh, but I'm too shy. I'm like, you have to shake yourself out of that place. If you are really serious about this, about building wealth through real estate, you absolutely have to get out of your own way. Okay. So I'm speaking from, this is me, this is who I am, this is how I open the doors for myself. If you know I, I did this before I even met Chris. So I've been there, and I'm telling you this because I'm looking at the names, and I know I have some conversations with some of you. They're like, well, I'm too shy, I don't like talking to people, I don't know a lot of people. But you have to do something. You have to do something. And the longer that you take to get to that, to do something, the longer more opportunities are going to go by, and they're going to continue to go by. So I don't know what is it that you're looking for as far as what's your next step. But if you don't have a plan, please reach out, because I would hate for us to meet in a year and be like, hey, so how is it going? What are you doing? What's your latest acquisition? Well, I'm still learning. I'm still running the numbers. I really need to get my confidence up so I can call the broker. Like, you just let a whole year go without doing something. Okay, so please don't be that person. I know many of you, I've talked to you a year ago, so maybe this is your wake up call. Maybe this is you're like, oh shit, she was talking about me. Well, yeah, I am talking about you, all of you, because I want to partner with all of you. And I believe that all of you have something to contribute to the next acquisition. And you know why? Because I found you. You think you found me. No, I found you. I invested so much time and money, my own money, to go to the events where I met you, to be and continuously reaching out to you. Probably driving you crazy with that many emails that I sent and all the texts. Well, guess what? I am paying a team to continuously be on front of you. I believe in you. I believe in you. And I'm not going to stop. But if you're going to stop, I cannot be more committed to your own success. Okay? I'm not going to stop. I'm going to always be here. Whether you're here for first time or you're here for like I've been doing this for 5 years. And if you are not in my, hey, like I'm texting you every day because we are working together on something, then something needs to change. But that change needs to come from you guys. Okay. So I'm done. This is not Sunday church, but I just felt like I needed to say that. So let me keep reading the questions because I know we wanted to talk about funds and raising capital. So let me see. Um, let's see. What is the minimum to invest with you, and what is a usual rate of return? Can you give an example? Yes, for an investment month to month and at the end. Okay, I can do that. Let me. What I'm gonna do, I'm gonna share my screen, and I know I'm running a little bit out of time, but keep yeah. I'm not gonna go to the next question because then I'm gonna get distracted. But what I'm gonna do is I'm actually going to show you because you asked a very, very important question. And I think I know that as an investor, when I started investing, I wanted to see where's my money going. Like have three questions. I had three questions when I invested with anyone. My question was how much initial capital I need. Okay. Okay, let me share my screen because I'm not sharing my screen. And I started typing. So, okay. Let me I'm gonna share my screen so that way you can see. So just so you know, when I'm sharing my screen, I'm not looking at your comments or questions, but I will do my best. So just bear with me if I don't answer your question immediately. That's why. So I wanted to know, can you see this? Might be too small. Yeah, there you go. All right. Is that too much? That's perfect for me. All right. So I wanted to know how much I need to invest. What's my initial capital contribution? How much I am going to make profit? And when am I going to get my money? When I get my money back or my profits. Okay. Right. Those are the biggest things that I was like, okay, I do have some money. I don't know how much money I need. So those are very important questions. So, and this is I'm gonna just keep it. We have some investors that invested with like less than the minimum. We normally do either 50, 25, 100, depending on the deal size. Through the fund, we do 50 minimum. But if you are, some people gets bonuses, so they want to invest their bonus and then they want to do like a every quarter contribution. You can do that. Through the fund, we have a lot more flexibility. But let's just stay with 100, okay? Let's just say so that for the simplicity of the math, okay? So and again, I'm gonna touch on because you're probably thinking, well, I don't have that. Let's just stay here, okay? Stay with me. Okay, so we pay 6% annualized cash on cash, okay? And I'm gonna save this last question for little later, okay? So let's say, um, so you invested because I want to show you not only okay tabs. All right. So I'm doing the math, so I make sure I tell you correctly. Okay, so annualize. Oops, there you go. Where's my? All right. So that means that you get 6K every year, and we paid monthly. Okay, I know some people like it's a lot of work. It's set up it's like unless you have 5,000 investors, you should be able to pay monthly. Okay, that's just me. I mean, my investors like to get the not necessarily like much of the money, but like they just like to see that they have that the deal is healthy and is cash flowing. Okay, so that's five. Hold on, let me see, make sure I got this right. Yeah, a month. Let me make sure I'm doing this right. Okay, 1 second. So one, 1, 2, 3. Okay. Yep. All right. So, okay. So let's say that this is a 5-year hold. Okay. So 5-year hold. So, and the 5 years. Okay. Sorry, I'm typing in another screen. All right. All right. Oops. All right. So, yeah. So on the 5-year hold, you get 30K back along every month, remember? And then the rest of it, because our goal is to is called double the money, so the EM, equity multiplier. Okay, so if we're projecting to double your money, so we're looking to do 70K here, and then when you said, well, I didn't double my money here, well, yeah, you're gonna add the 70 on the exit usually. I'm sorry, I'm not showing you this, plus the 30. Okay, and that gives you your 100, and then you all get to, in capital contribution, okay, back. Okay, so that's the simplest thing, the simplest way to explain it to you. Um, okay, so that's how you do two equity multiple. And now we've done this 3 times. Not only for, well, the first time we did it for ourselves. The second time we did it with a handful of partners, so as a joint venture. And then we've done it for in syndication model for investors. So and we've done actually better than that. But this is what we present with. This is what we don't overly estimate that we will do better. Would we do better? And or in our previous deals, we've done better. Again, we're not going to project that. But if we do better, guess what? Everybody does better. We just sold a self-storage facility with 3.2 times our money and that and our investors' money. So again, we only projected double the money, but the property did very well. It actually returned cash flow, probably about 10% cash flow, and then it appreciated nicely, and we sold it at a really good profit. So again, I think that answers your question. The other thing that I wanted to explain here is if you are a high earner like me, you're very highly taxed. Okay, and I don't like that. All right, so what we do is that we do the cost segregation. The cost segregation study is going to help you to accelerate your depreciation. And in this case, we've aimed to, because again, our fund is a diversified fund. We also invest in private money lending and notes, and those investments do not have a they don't have a depreciation. So those are all flowing. So we're always looking for other deals that are going to create that depreciation. And in this case, let's say that we aim to do 60%. Let's just say 60% of your invested capital. All right, it's going to be depreciation. Hey, Brad, as one of our mentors. It's always good to see, you know, the whole full moments. Anyway, so what we do is we look for assets that have depreciation in it. Uh, so in this case, let's say that we calculate 60%, just conservative. Now, the 100% accelerated depreciation is back, and thanks to that, we've been zero federal taxes for 5 years in a row. But let's just get it the level that where we are right now. Okay, so we're aiming to give you about 60K on depreciation for this. Do I have you back? I think my internet lapsed for a second. All right, let me share my screen again. Yeah, you're back. Okay, awesome. Thank you. I love the thumbs up and all this. You have to make it work, right? All right. So, yeah, so back to the numbers here. So we aim to give depreciation of about 60,000. So if you look at the how much you're gonna get on cash flow here, this right here, it's going to be offset by this right here. Okay? So what you're doing, or what we're doing, not only for ourselves, but also for our investors, is to increase your revenue, your income, without triggering more taxes. And that, my friend, it's a thing to share. Because that's how you increase again, maybe you have your business, maybe you have again, a profession where you get highly compensated and you get taxed accordingly. You want to start shoveling some of that money in a place, in this case real estate investing, where you're not only sheltering it but also being able to invest it, and again you're gaining from the appreciation, the depreciation, and you're tackling all of this. And maybe you're like, well, I don't have the 100 yet. Well, let's start where you are. Okay. But this formula is going to apply to any kind of investment, at least when you invest with us, because we like the fact that we can depreciate it, and then offset and this is a very high level. Again, I'm not a CPA. I pay several CPAs to get educated and implement all of these rules, but make sure that you're following their advice. And actually, I wouldn't even say that, because some of them, like, you have to educate them. Many times you are the one that is bringing them with these situations, and they might not even be savvy at it. We have one of our partners that we issue the K1s. When you're a general partner, you get two K1s, one for investing the money and as a passive investor, and one for the equity that you receive as a general partner. So this person received two K1s, and the CPA, like, you must have, they probably did like have a mistake here. They gave you a wrong one, blah, blah, blah. I'm like, no, this is what you get when you are a GP and an LP. Anyway, so if you don't have a person that knows understands this real estate game, let me know. We have several that we work with, and we'll be happy to make the connection. Anyway, so I think let me go back to, I'm going to stop sharing now, and let me go back to your questions and see if I see anything else here. Um, that was a really good question. I hope that it helped many of you. Let's see. Thank you. Awesome answer. Very thorough. Always. Okay. This is why the property doesn't um support that price. Okay, I don't understand that comment, but yeah, you want to make sure, that's the thing. You want to make sure that when you're negotiating, take it back to, this is the property. This is not me. It's not going to hurt my feelings. I'm still committed to growing my real estate portfolio, but it just has to make sense. Remember, the lender is your biggest or your largest partner in this acquisition. So you want to make sure that you are doing the right thing. If not, guess what? You're not going to have that partner. And if you don't have that partner, you can't do acquisition. So it's so basic. It really is so basic. Don't overthink it. Seriously. This is, how can I help with you with the next acquisition to be a general partner? Let's go. Let's go for sure. If you are looking to partner up, that's what we do. These events. That's what we you're here because again, we're purposeful yeah, we're purposeful in the way we stay in front of you. So if you are ready for acquisition this year, seriously, get in touch. We'll love to have that discussion. But yeah, awesome. All right, guys. I do have to get back to this conference, which is a lot of great things. We'll be hosting this event next Saturday, so we're looking forward to seeing you next Saturday. Again, Q&A, sharing takeaways, case studies, and I believe I've showed the how we increase the value of this like last property $1 million in less than 30 days. So this is doable. This is practice. This is not theory, like we mentioned. So if this is too high level for you, please make sure that you send your questions ahead. Maybe you like need to re-listen to this and write your questions. Maybe you're on the go, like I do many times, listening to something while I'm on the go. Make sure that you're getting back to us. You we love to have your questions, and mostly we want to partner because the more that we learn and grow together, the more acquisitions that we can make this year. So looking forward to it, and I'll say bye for now. All right, thanks. Bye bye, guys.